Capital. Both are joining us now to take us through what they're making of things. Gentlemen, good afternoon. You're joining us on a bit of a down day. Even less than a 1% cut, but we're more used to green than red. So this does seem a bit jarring sometimes. I want to start with autos specifically because I know you guys like the entire auto space. We've spoken about this in the past. We had the managements of Maruti and Eicher earlier with us. Maruti specifically joined us on whether discounting in the small car segment was actually on the rise. The Maruti stock, for example, has not done anything exceptional, right? Compared to the market, it's actually hugely underperformed. Charandeep, what are your thoughts on that space, and if you have a view on Maruti specifically?
Yeah, sure. I don't have a view on Maruti specifically, but I must say that the auto space seems to be picking up. One important trend that we have highlighted in the past as well is that there's been a sort of a SUVization of the Indian car market. So as we all know, that Maruti was the traditional leader for many, many years. And, it was largely the small car that sold in India where they did well in certain lower end segments. Now, the thing is that it's obviously been so many years and with so much inflation and purchasing power going up of the Indian population, you have people who want a better experience with their cars. They want more features in their cars. They want better cars, larger cars. They want to spend more money on cars. So you have the SUVization of the Indian car market. And I think this is something to take note of. So you have possibly guys like a Mahindra and Mahindra who are making very different kinds of cars and giving people an experience which is par international and features that are par international. And, to some extent, one could argue that Maruti was left or caught a little napping because their products weren't up to the mark, or at least not as modern as the products of someone like, say, a Mahindra and Mahindra, which has sort of come out of nowhere to do pretty well. So there's a large change in the Indian car market. Maruti, of course, great company historically, but it needs to do a lot to deliver and capture market share. It's coming from behind in the incremental car market, right? So it still sells its own models, but incrementally it's lost a lot of market share, and it's coming from behind for the first time in the car market that really matters.
Good afternoon, gentlemen. Nigel on this side. I'm looking at the document that you'll normally send, and the cash that you're holding, cash as a percentage is around 14%. What's your plans? Do you plan on deploying this money, or do you want to keep some ammunition ready in case we're going to see some bit of a correction? More importantly, where does the fresh money get deployed into? The mid-cap and the small-cap indices have been lagging. The breadth of the market doesn't feel like we're at 18,500. That has a lower allocation as of now. Is that the space you like?
Okay, I'll take that, Nigel. So, we don't take cash calls per se. We are always looking for opportunities to deploy. So, the cash could be a reason because we might have sold something where we thought that the valuations have or we've achieved our desired target. But we are always looking for opportunities. And since we run a multi-cap fund, which is about 50% large cap and 50% mid and small, we try to keep that balance, and we are looking in every space. So whether it's small or mid or large.
Varun, can you tell us what is it that you recently sold?
I don't really want to get into stocks and, what we really sold or bought, but, we are always balancing our portfolio.
Fair enough. So can you tell us where is it that valuations, according to you, are fair? The sectors where you see valuations fair, and where is it that you still see some value? Give us some ideas to work with, if not individual specific names.
Sure. We've been talking about this whole theme of CapEx, and we are always, we are looking at, we follow sectors, right? So we talked about the whole PSU theme where we really talked about the slippages coming down, and actually it's linked to the whole CapEx cycle because now we are talking about growth coming back into PSUs because of CapEx being planned in the country. So I think what we're looking at is the whole CapEx space, and market really moves in cycles. We've seen the whole decade of the past, past, in fact, almost 10 to 15 years, where people were only into consumer names, where even in terms of banking, people were looking at private banks, which was catering to consumers and retail. For the first time, we are looking at banks which cater to companies and corporates, and which and because of the capex cycle, I think that trend is really changing. You're looking at engineering companies, you're looking at capex-led companies, you're looking at PSU banks. So I think that theme is really playing out, and the cycle could last for longer. Of course, you might have valuations, go up here and there, but I think the cycle is there for some time.
Okay, cycle is there for some time. Got that. Just I don't know if you guys looked at the flow figures today, the mutual fund monthly numbers. The net equity number is now a little over 2,000 crores. It's a sharp fall. The SIP number is sticky, but I guess the discretionary number is seeing a lot of pressure. Charandeep, any thoughts in your funds?
Yeah.
What are you seeing? Is this
I do have some thoughts.
Yeah,
I do have some thoughts on that. I think one will have to go a little deeper than just look at the headline number. Sure, there has been outflows from active funds, but one space that's getting a lot of money that I believe is not reported in the equity schemes is passive money. So ETF money, for example, the SBI index Nifty ETF is now like 1,60,000 crore. It's getting flows every month. It's not captured in this number. Pension money is not captured in this number. So I think domestic money has many new faces and facets. And this is a big trend change that we've seen, people moving into passive money or the passivization of Indian markets. And most of that's going into large cap schemes and essentially the Nifty 50 or the Nifty 100. So there are flows. Yeah.
Okay. All right. Also I wanted to ask you about, it appears that you'll have increased your weight on a couple of stocks. I think Varun just spoke about the PSU banking space, and SBI now is the top weighted stock. I'm looking at your portfolio. So have you increased weightage out there? And Devyani as well as the other one that sneaked up. You already had Zomato. Devyani from the QSR space, it seems that you'll have increased weightage out there. Is that correct?
Yeah, that's correct, Nigel. That's correct.
Devyani as well as...
again, both, we talked about the PSU themes where the slippages are coming down, and we'd like to back the leader out there. So that's why we feel that it's a good place to be with an SBI. And Devyani, again, it's the retail QSR space, which we feel that has a very long tail. Not just Devyani, but we feel that that space itself is very exciting because now it's getting consolidated with just 3-4 players out there, and I think it has a very, very, very long tail because all these guys have got their models right. And they are all expanding very, very aggressively. So we feel that the QSR space again is a very interesting space to be in.
Arun, I just last time as well I tried to probe you on this. Zomato is part of the holdings. Paytm, has it come into your study category? Have you all been studying it? Do you all think you can chip in there?
I'm happy to take that. I'm happy to take that question. But, I think if you're generally, Nigel, asking about some of these new age companies, which if you see there's been an out and out collapse in the price of many of these stocks, and at some level, it seems like they're finding some interest at levels which are between 60 and 90% or 60 and 70% below where they peaked. So a lot of these have generally become much more reasonable and attractive from a 5 to 7 year perspective. That whole basket is very high quality, in our opinion. The good businesses, the listed Indian new age companies are really good businesses. Of course, we've picked the ones we liked, right? Or where we thought that we could best make money. We'll be very open and aware of the pricing and the opportunity available. There may be more supply coming in. The good news is a lot of the supply could be getting absorbed, and some of the weaker hands may have gotten out. So there seems to be an opportunity here, and we are alert to any name that could meet our criteria. The one name that we like, you're obviously seeing in our portfolio already.
Got that. Charandeep, I see you also have Blue Dart, about 4% exposure to Blue Dart in your portfolio. Earlier, just a couple of days back, we were chatting with TCI Express, which is largely in B2B, but they indicated that things are slowing down rapidly in the B2C e-commerce logistics space. Even there was that warning from delivery and the stock collapsed after that things are slowing down on the e-commerce logistics space. Can you tell us what's happening? What is it that you've observed? What are the trends? And what's the best way to play logistics?
So it's a good point. I think logistics has many facets to it. Like you mentioned a bunch of companies in there. Of course, the e-commerce pure plays are more along the lines of delivery. Blue Dart is a historical business. It's into many traditional document delivery businesses. It does B2B work for several large corporates. So it's largely a B2B business, rather than a B2C business like many of the others. E-commerce is a part of their basket. And you're right, there is definitely a slowdown with reopening in e-commerce, as we are seeing from the likes of Amazon. Online shoppers are back. Restaurants are seeing more interest for dine-in as opposed to takeaway. So that whole sort of reversal of what happened during COVID. So, yes, e-commerce as a basket has slowed down a little bit. But, if you look at the long-term trend, it's very, very intact. So one has to be very cautious and aware of what one's buying. One can't just buy at any price a 100% e-commerce exposed company. One could tend to take a large hit there. So we've chosen to go with somebody who's quite well diversified, who's been around a long time, proven cash flows, and where the growth we think is going to be reasonable and consistent across most of their verticals for several years to come.
Varun, Charandeep, thank you very much for joining in. Pleasurable conversation and have a great weekend. By the way, the Nifty is now back at 18,500.